Critical Mountain Pictures presents the Forex video training series, Black Belt First Degree, Introduction to Trading the News. Reading the news is important. It's not enough to only know technical analysis when you trade. It's just as important to know what makes the market move. Just like the great Star Wars world, behind the trend lines, double tops, and head and shoulder pattern, there's a fundamental force behind these movements. The force is called the news. To understand the importance of the news, imagine this scenario. Purely fictional, of course. The lawyers told me to put that. Let's say, on your nightly news, there is a report that the biggest software company that you have stock just filed bankruptcy. That's the first thing you would do. How would your perception of the company change? How do you think other people's perception of the company would change? Your obvious reaction would be that you would immediately sell off your shares. In fact, it's probably just what everyone else in the had the stake in the company would do. The fact that the news affects the way we perceive and act our own trading decisions is no different when it comes to trading the currencies. There is, however, a distinct difference between how news is handled in the stock market and the forex market. Let's go back to our example above and imagine that you'd heard the same report of the big software company filing bankruptcy, but let's say you heard the report a day before it was actually announced in the news. Naturally, you would sell off all your shares. The result of hearing the news a day earlier, you would save more money than everyone else who heard it on their nightly news. Sounds good, right? Unfortunately, this old trick is called insider trading, and it would have gotten you thrown in jail. Martha Stewart did it, and now she has a nice mugshot along to go with her magazine covers. In the stock market, when you hear news before everyone else, it is legal. In the forex market, it's called fair fucking game. The earlier you hear or see the news, the better it is for your trading. There is absolutely no penalty for it. Add on some technology and the power of instant communication, and what you have is the latest and greatest news at your fingertips. This is great news for retail traders because it allows us to finally react to the market speculation. Big traders, small traders, husky traders, skinny traders all have to depend on the same news to make the market move, because if there wasn't any news, the market wouldn't hardly move at all. The news is important to forex market because it's the news and that makes the market move. Regardless of the technicals, news is the fuel that keeps the market going. So, why trade the news? The answer is simple: to make more money. But in all seriousness, trading the news gives us another opportunity to trade in the forex market. As we learned in the previous section, news is a very important part to the market because of what it makes it move. When news comes out, especially important news that everyone is watching, you can see the major movement. Your goal as a trader to get on the right side of the move, but the fact that you know which way the market will move makes an opportunity definitely worth looking at. As with any trading strategy, there will always be possible dangers you should be aware of. Here are some of those dangers. Because the market is very volatile during important news events, many dealers widen the spread during these times. This increased trading costs and could hurt your bottom line. You could also get locked out, which means your trade could execute at the right time, but may not show up in your trading station for a few minutes. Obviously, this is bad for you because you won't be able to make any adjustments if the trade moves against you. Imagine thinking you didn't get it triggered, so you try to enter a market, then realize your original order got triggered. You'd be risking twice as much now. The news causes slippage. You could also experience slippage. Slippage occurs when you wish to enter the market at a certain price, but due to extreme volatility during these events, your order actually gets filled at a far different price. Big markets made news often in one direction. Oftentimes, the market may start off flying in one direction, only to be whipsawed back in the other direction. Trying to find the right direction can sometimes be a headache. Profitable as it may be, trading the news isn't as easy as you'd think. It takes tons of practice, and you guessed it, more practice. Most importantly, you must always have a plan in place. In the following lessons, we'll give you some tips on how to trade the news. Which news reports are tradeworthy? Before we even look at strategies for trading the news, we have to look at which news events are even worth trading. Remember that we're trading the news because the ability to increase volatility. In the short term, so naturally we only like to trade the news that has the best potential market moving potential. While the markets react to most economic news from various countries, the biggest movers and most watched news comes from the United States. The reason is that the U.S. has the largest economy in the world, and the U.S. dollar is the world's reserve currency. This means that the U.S. dollar is a participant in about 90% of all forex transactions, which makes U.S. news and data important to watch. With that said, let's take a look at some of the most volatile news for the U.S. In addition to inflation reports and central bank talks, you should pay attention to geopolitical news such as wars, natural disasters, political unrest, and elections. Although these may not seem to have as big an impact as other news, it's still worth paying attention to them. Also, keep an eye on the stock market. There are times where sentiment in the equity markets will be the precursor to major moves in the forex markets. Now that we know which events make the most out of our moves, our next step is to determine which currency pairs are worth trading. Because the news can bring increased volatility in the forex market and more trading opportunities, it is important that we trade currencies that are liquid. Liquid currency pairs gives us reassurance that our orders will be executed smoothly and without any hiccups. The euro dollar, the pound dollar, the dollar yen, the dollar Swissy, the dollar CAD, and the Aussie dollar. Did you notice anything here? That's right. They're all major currency pairs. Remember, because they have the most liquidity, major pairs usually have the tightest spreads. Since spread widen when the news report comes up, it makes sense to stick with the pairs that have the tightest spreads to begin with. Now that we know which news events and currency pairs to trade, let's look at some approaches to trading the news.